Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just wanted you to know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. I would say, okay, so there has and is a lot going on here in a relatively short amount of time. The most obvious one had been the multiple contradictory reverse head and shoulders as well as regular head and shoulder topping patterns, which gave us targets and then the market took them away. However, the top side has been dominated in recent times, despite a brief breach higher 5 weeks ago and again last week, by the combination of the slowly declining flatlining gold long moving average, which is above, currently at 560.5, plus the overhead flat dark blue trend line, which is currently at 570.25, of one of the head and shoulders patterns here, a mid-March to early June reverse head and shoulders pattern. I said 7 weeks ago, and I quote, "Please just bear in mind that beyond these we have some clear air, so up until the congestion at 588 and the March 2021 low at 592, end of quote. Now we saw this happen 6 weeks ago with that breach, sharp run up, then getting capped by the congestion at 588 and the March 2021 low at 592.25, followed by an equally sharp drop lower. Then on the downside, we also saw once more the impact of the declining purple neckline extension, which is currently at 532. And it had on the downside of the market supporting prices from below as recently as late June. Then early 2 weeks ago, and I suspect very soon as we approach this support once more this week and next week. In the meantime, I have been looking at something else that might show a different point of view to this market, and this is where the bright red highlighted mid-February to mid-June bearish Andrews pitchfork comes in. It is early on as yet on this one, but last week had been a revelation, with the top of the market capped by the upper time, currently at 565 even. This is starting to be a better view of what is happening here than any head and shoulders idea. For this pattern right now, we are in between the overhead upper time and the middle time below, which is currently at 508.25. Please continue keeping an eye on this one as it's becoming increasingly useful. Chicago corn. 8 weeks ago, I drew a mid-February to mid-April bearish Andrews pitchfork, which, whilst not being exact, showed for quite a while the bearish angle of attack of this market. Time has moved on and the market chose to finally follow the shallower bearish shift pitchfork on the daily chart for the same move as the bearish Andrews one, transitioning from the steeper Andrews to the shallower shift pitchfork outlined in dark blue on my daily chart. Thus, right now we are just underneath the overhead middle time, currently at 418.75. 5 weeks ago, we had a break lower to new lows not seen since September last year, and it was only congestion at 403, plus the just below November 2020 low at 397, plus, importantly, the lower time, currently at 383.5, of the bearish shift pitchfork that halted and turned prices back up. But the subsequent recovery was not an easy one, with an artificial weekly key reversal up due to changeover, and prices started 2 weeks ago running along the underside of the middle time and just underneath the green descending short medium moving average, currently at 419.75, and piercing and closing and now stabilizing below the December 2020 low at 414, which ties in with the low of late November last year. So looking below again, support of dubious strength that is fairly evenly spaced out at 409, 403 until the November 2020 low at 397 and this year's low at 391.25. There is limited support below this, realistically at 386.5. Then the August 24 and 24 low overall at 385, before a low, not monthly lows, but just a low from late 2020 at 369. After this, well, we have at the bottom of my daily chart the old 2006 to date uptrend, currently at 349. The only other thing I would mention is that the dark blue bearish shift pitchfork seems to be good at the moment in showing the way lower, and that does not extend that far down until we start looking towards the end of the year. And that is something to bear in mind. It is, after all relatively shallow when compared to its earlier related bearish Andrews pitchfork, which was much more steeper. Kansas City wheat. The major pattern here continues to be the dark blue February to March bearish shift pitchfork. A few weeks ago it was not a great looking pattern, having both the lower time, currently at 467 3/4, and the upper time, currently at 562 3/4, pierced, but neither of them were broken. And thus, both times continue to play a role, a more significant role these days in showing the bearish angle of attack, despite the recent change over gap higher. Interestingly, in recent weeks a new pattern has emerged, though this has been breached, though not as yet broken, whilst at the same time some older resistances, and I suppose supports as well, have influenced the market. The new pattern started out as one thing and developed into something else. You see, I said 6 weeks ago, and I quote, the short purple upper trend line of the interesting mid-May to date bullish halfway hesitation. This pattern is interesting as it started as a possible double top pattern, a quite good looking pattern, that then became a small expanding wedge pattern. And that pattern is currently 516 1/4 to 577 1/4, and that's the end of the quote. I'm beginning to suspect that the purple lower trend line is now working in association with dark blue middle time. However, I still think the dark blue bearish shift pitchfork is the more dominant pattern here, and I would not wish to take anything away from it. Meanwhile, looking at the older resistances, well, they consist of the combination of the bright green lower trendline extension, currently at 563 1/4, of the November 23 to April 24 descending triangle, plus the declining mauve medium moving average, currently at 553 1/4, and just above these, the long moving average, currently at 564 3/4. These in reality did not stop the market's rise, but they sure eroded the move higher last week, along with that March 2024 low at 551, enough for prices to turn lower. At the same time, the support of the 38.2% Fibonacci line, absolute Fibonacci line, at 532.5, and the low of August 2024 at 527, which was in turn created by that same 38.2% Fibonacci line, managed to hold up prices below over June and into July, as well as this week. These, along with the middle time, currently at 515 1/4, eroded the bearishness we saw in early July, but as they are now separating, I am not sure how strong they will be so far apart. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.